It's that time of the month again, time for a market update. Today I'm going to show you not only how to check a market in Phoenix, but anywhere that you live using online tools. So let's get started. Hi again folks, thanks for joining me as we go through this market analysis, see what's happening in the housing market. There's been a lot of turmoil in the market with the talks of tariffs, not tariffs, what's going to happen in the economy. So the first thing we always want to start is with mortgage interest rates. Why mortgage interest rates? Why not housing prices? Housing prices tend to move a little slower unless you have a big crash. Mortgage interest rates can move every single day. Let's take a look at Mortgage News Daily to find out what's happening now. If you've been here before, you know that Mortgage News Daily is my go-to for mortgage interest rates. We take a look at really over the last few months where mortgage rates have gone. There's two charts on here. There's one for the Mortgage Bankers Association and one from Mortgage News Daily. I prefer Mortgage News Daily. They're closer to the Arizona rates, and so I default to them when I'm looking at mortgage rates. So if we start with 30-year fixed, we can see way back in January 13th we were at 7.26%, and we hit a low back at the beginning of April of 6.6%. So almost 60 basis points in drop. Now with the news lately, we see these up and down fluctuations, and we've settled just about 6.81 so far today. I did see the 10-year treasury did drop again today, so we may see this move lower. But if you're a first-time home buyer, then we want to look at FHA. And we see these same fluctuations. Back on January 14th, we're at 6.59%. Today, we're at 6.19%, so 40 basis points drop. We did hit a low. We almost broke under 6% back on April 4th. We do see, if this trend line would have continued in this direction, by now we would have been probably in the fives, the high fives. But there's always market volatility when people are unsure of what's happening. So 6.19% for a first-time home buyer is not a bad rate. Now, I know many of us are spoiled by the fact that we were at 3% back in 2021 and half of 2022, but if we go back and take a look at that, let's go back to 2022. You'll see these lower interest rates really started to change in about April, and we started going about 4%, and then by September we were at 7%, and this has moved in a pretty flat line since that time. So these are basically historically normal interest rates. If we go back 40 years, the average interest rate was about 6.67%. So we're right in that range. The question is, can we get lower if the economy improves? And how does that happen? Well, many of you know that the 10-year treasury is the key to that. That and inflation. If the 10-year treasury drops and inflation stays low, we'll see these rates come down. If inflation ticks up, of course, the rates go up. And then if we have to entice people to buy our debt through the 10-year treasuries, this could also go up. The point of this is you've got to strike when the iron's hot. When you see rate drops like this, we saw back on April 4th, it's probably a good time to be pre-qualified and maybe lock in a rate if you know the house you're going to buy. How are housing prices reacting? And like I said, I'm going to show you Phoenix, but the tools that I'm going to give you will allow you to look at your market as well. So let's get started with that. The first place we're going to look is the National Association of Realtors Market Analysis Statistics on the public side. Tableau, of course, is a big database and spreadsheet aggregator where you can bring in a lot of different information and select different parts of it to focus on what you want to focus on. So Tableau, first thing we're going to do is take a look at Phoenix, Arizona. And from this drop down, like you saw, there are many different cities. If you live in a different city, certainly, pick the one you're at. I can even go back and look at where I used to live, Pittsburgh, where I grew up, just for instance, just for the heck of it. Let's take a look at housing statistics in Pittsburgh just to take a look. And in this, you can scroll through housing statistics to find out what a median home price is over the last couple of years. So during the height of the selling in 2022, quarter one, before interest rates went up, they were at 199.2. Now, fourth quarter of 2024, 225.4. How does that compare to Phoenix? When we go to Phoenix, we'll take a look at housing statistics once again, and you can see where Pittsburgh was 225, Phoenix, the median price was 476.4. If we went back to 2019, right before the pandemic, you can see that rise in appreciation of Phoenix homes, $200,000. If we go back just a little further, from 2017, there's been a 100% appreciation on Phoenix homes. Another important point to look is for housing construction. These are permits within the last 12 months. And during the big rush in 2005 that caused the housing crash, you saw permits really exploding. Same thing here during the pandemic. Housing permits accelerated, although not as much as back here, and that's why we don't have the high probability of another housing crash, because we didn't overbuild like we did back here, although we did build quite a bit. Today we're down to about 26,000 new starts as of February 2025. Economic conditions for Phoenix, so you have 2.9% GDP growth, and we have a lot of technology coming into Phoenix, so this GDP growth is probably going to take off quite a bit. Wage growth has been 7.5%, and the unemployment rate is lower than the national average. So if you live in Phoenix, good place to live, work, and play. If you like the desert, if you like the drier conditions, if you don't like bugs or lots of rain, could be a good place to be. Homeownership demographics is also important. When we take a look at the number of households, we look at 33% of the households are renting, 66%, 67% are owners. We also see that the median age of ownership is skewing toward older owners now. Even renters, average age or median age is 40 years. Home ownership at 57 years old is fairly high historically. Renters, median age is 40 years old, which is also fairly high. Usually by age 33, people start looking at not paying someone else's mortgage and getting their own. You see the difference between household income between owners and renters as well. Like, renters simply can't afford to buy homes with a median household income of just about $60,000, and it even breaks it down by racial and ethnic group. So this tool is helpful. Again, this is on, I'll leave a link in the description, thepublictableau.com, in order to take a look. But we really want to dig down deeper into housing market statistics, and for that I go to Redfin. This is redfin.com, the news data center. This is available to the public. Anybody can access this, and again, I will leave a link below so that you can access these tools as well. So new listings. When we saw 2022, at the beginning when interest rates were really low, up until about April, we saw a lot of new listings coming on the market, and then they sort of died off when interest rates peaked. For the last 2 years, 2023 and 2024, those new listings have been lower, but 2025, we've seen a definite uptick. So what's causing this? Could it be that people simply have to move for work or moving out of state? Whatever it happens to be, new listings are up almost 25% year over year in Phoenix, Arizona. You can also use Redfin's, just like Tableau, you can use Redfin's monthly housing market data to pick wherever you are. We'll deselect this. We're going to go to Arizona. And to make it easy for this region, we're just going to scroll down to Maricopa County, which encompasses all of Phoenix itself. We want to look at single-family residential primarily, and we can actually look at month-over-month or year-over-year changes, which we will do. And the time frame we're going to pick is from about 2014 all the way till today. And 2014 was after the big crash in 2008, so we had a sort of normal market where we had median sale prices staying pretty static, and then we hit the pandemic. And again, we saw that enormous boost in median sale prices. Then, after the interest rates went up, we saw it drop back down. This is really the median area. But in 2023, we had a 9.6% drop year-over-year change in prices. Now, we're at about 0.7 increase in March 2025 year-over-year. We check month-over-month, 2022, you can see this. It's really fluctuating within a range, but we do see month over month, we do see a little bit of drop in March from February and January. This is the spring selling season, so a lot of properties come on the market here. If you're going to attract someone to your property, you're probably going to have some concessions or lower the price. So this tool can help you find out what's going on inside your market. Again, you can choose any state, county, region, city to take a look. But let's dig deeper into the numbers where we have pending sales. Pending sales are trending with the lower markets we had in 2022, 2023. They're staying subdued by the high interest rates, so not a lot of change there. When we look at the number of homes sold, it's exactly the same thing. Again, this one is 2022, lots of homes sold. 2023, 2024, and 2025 are turning out to be fairly slow markets. Now we look at new listings and median price. This is interesting to me because we see back in 2022 when prices really exploded, we were up at $400,000 basically for the median selling price for new listings, and that was 15% higher than 2021. In 2025, we're much higher on our median selling price. So you can attribute some of this to appreciation of home values going up, but this is a pretty stark change between 2024 in 2025 where we were at. In 2024, 402,000 was the median listing price, and now we're at 425. So a 5.78% increase in price year over year. Now this is the listing price. What are the median sales prices? Remember, we were at 425, now we're at 389 for what it actually sold for. Still higher than 2024, although it's only a 2% increase from the actual sale price a year ago. So I've shown you how to look at your market wherever you happen to live. I really focused on Phoenix, but you could look at any market you want to. And now we're going to look a little deeper into Phoenix by going into the MLS, the Multiple Listing Service, also known as ARMList. For Arizona, ARMList gives us the most up-to-date information about the marketplace, particularly in Maricopa County, which is the largest market in the state of Arizona. First off, we see 26,000 listings, 6,349 sold in the last 30 days, 14% down month to month, and under contract we have about 9,351. I talked previously about sold to list price ratio. When we look at median sold, we get 98.92, same as Redfin showed us. Average is also listed, but I like to use median just to get the middle of the marketplace. Price per square foot. If we look back at April of 2024, we'll see the median was 258, and we look this month it's 259. So again, up slightly. Redfin was on the money with that. Supply versus demand. The last update we showed that we had 4.17 months of supply. Now we're down to 3.63 months of supply. Getting a little bit better for sellers, but the absorption rate is so low that your home is going to sit on the market for quite some time. If we go to sold listings and take a look at what's happening with them, that median is just right about, just slightly below that 270. And if we look at the cumulative days on market, median cumulative days on market, we have 52 for the median, 75 for the average, 52 days to sell your home, which is down from January, which was well above 60. You see back in January of last year, 2024, we see the same thing because during the holidays, people aren't really looking for homes. So those homes are going to sit on the market a little bit longer. But what we see this year is this continues to climb, so that this year we have a 20% increase of cumulative days on market from 45 to 52. And if we go to the average sold to list price, you'll see you have average sold to original price, which means that people might, let's say you have a $500,000 home, you listed originally $500,000, then you lowered the price and the listing went down to $480. You're going to see a little bit of a less of a drop in the average sold to list price because people have adjusted their price correctly. So they're getting about 98% of their sold to list price, but they're only getting about 95.2% of their original list price. And you can see that down here, sold to final, just about 98%, and sold to original, 95%. So again, the lesson here is price your house right from the beginning, and you'll probably move it a little bit quicker because people are going to be willing to be in this price range area where you're going to end up anyway. Median sold to list price is exactly the same thing. From the original price, they're only at 96.8%, about 97% of what they originally priced the home at, but they're about 98, almost 99% of what they end up listing it at after adjustments. Now let's go to the supply and demand side, and in case you didn't get the hint from my previous discussion on this, inventory is really, really high. You can see the seasonal active listings year by year going up every year from 2023 to 2024 to 2025. This chart shows the exact same thing. Lots of supply out there, but what's the demand like? Demand is low, even lower than it was at 2023 during this period, slightly higher than 2024. And because of that, this is showing it's in a buyer's market. Now we're not at 6 months supply, but those listings, the amount on the market is so high and the demand is so low that ARMList is showing on their chart that we are strongly in a buyer's market. Buyers have the choice of whatever home they want to take a look at, make whatever offer they feel like is reasonable in order to get the home. So for those of us who like pictures, this is actually Maricopa County's market statistics for single family homes only. This doesn't include manufactured homes or attached homes like condominiums or townhouses. And this chart is important to show that new home builders are taking up a bigger part of the market now. The last few months it's been about 12%, now they're at 13.63%. whereas 80%, the median of the market, is going to be a normal sale. You have some flippers out there. Flippers are having a hard time right now because they buy a home, they put in a lot of money to turn it around, and then the market prices begin to slide, and so they're not going to get their return on their investment as quickly unless they're very frugal in the way they do their business. For those of you who enjoy these numbers, I like to call these videos stats for nerds. I'm a numbers guy. I watch these all the time. I watch the 10-year treasury every day to see the direction it's moving in order to bring you the most timely information I can, as well as a historical look at what happened in the past month. And you can help me out quite a bit by hitting a like on the video, and even better by subscribing or sharing it to someone else. It helps spread this information out for other nerds like us who like to see the numbers. So thanks for stopping by, and I hope you're able to get some information about this marketplace, not only in Phoenix but wherever you live, because now you have the tools to go and check your market yourself. See you next time.